What's up, good people? How you doing? Welcome to Stock Up with Larry Jones. Good morning. Good morning. Who we got out here this morning? We have bank earnings coming up. Good morning, fam. Good morning. Good morning. Good morning. How are you? Yes. All right. Let's get things going here. Good morning. How are you? Good morning. So we got the banks. The banks are very active this morning. I'm going to show you guys a chart that I just took a picture of in a few minutes here, pulling it up. And I want you guys to see what is going on with the banks. All righty. I just want to pull things up here and we're just going to go back and forth. All right. Hey, good morning. Hey, good morning. That's my girl, the Sylvia Scott Show. Man, that's the Sylvia Scott Show with a live band bringing you in. Good morning. Hey, good morning. Good morning, Jerry. Saint. We got saints in the house. Michael, good morning. Hey, good morning, the Exodus soldier. As my people say, how? Hey, good morning, like that. Happy it's Friday to you too. Good morning. Hey, let's get into a little of what's going on. We got bank earnings. I'm sorry about that. Where is it at? Okay, so as we could see here, let's look at what's happening with the banks. So these are the regionals. And they're all up about 2% at the time of recording this. So the regional banks are up about 2%. If you're playing the banks based on earnings, of course, there's earnings going on right now. Jamie Dimon of JP Morgan spoke. And as you can see, the lady in the right-hand corner, you see her face. That's after she saw the gun show. I'm having a little fun this morning, good people. And as you could see, the major banks are actually outperforming the regional banks, okay? They profited actually off of it. Now, remember, these banks, a lot of them have yet to report, so we shall see what's happening. Of course, you see the lady's face in the right-hand corner. That's after she saw the other gun show. I'm just in a silly mode this morning, good people, because you guys, look at this. Been working. I've been changing clothes. We got workers going on in here. I have a whole reset going on, and I've been trying to work around it. And today is finish day, so I'm a little slap happy that it will be done today. All right. Hey, OKC in the house. Oh, can you see? Hey, good morning. Holla. Good morning. Hey, good morning. So they're talking about General Electric right now. Biggie. Let's see. You guys know that today is sponsored by Stock Up You. Almost 1,000 of you guys have joined the family. And every single one of you are grateful that you did, because we're learning and we're earning. It really doesn't matter how long you've been investing if you don't know a lot of things that's in this class. Of course, we have all of these guests: Joshua charting, options, dividend trading, basic fundamentals. We got Keenan Grace, stocks with Josh. We got Stock Curry. We got Mommy Trader and yours truly. And you guys, of course, you know about the 15 free stock with Moo, right? All right, so let's get back into the news. Back to the matter at hand. We had a Fed speak, a Chicago Fed speak, and we're talking about recession. Let's talk a minute about should the Fed go up 25 basis points? Some people are still saying 50, right? Let's change the red to yellow. There we go. How about green? Blue. That's not doing much. Yeah, let's keep that yellow. don't like the red in there because we're not going to have a red day, hopefully. All right, so 25 or 50 basis points. What should the Fed do? 25 or 50 basis points in May, right? We know that April there is no rate hike, and we are going to May. The question is, should the Fed go up in May and go away? There's a saying, sell in May and go away. But I will tell you that even as little as 25 basis points could at this point tip the market over. If they're lying to us about the banking system, 25 basis points, because a lot of people are screaming stop to the Fed right now. Do not raise interest rates any higher. It's too dangerous. The market is too fragile, right? We saw what happened to banking. And I believe that even with an extra 25 basis points at this point, another shoe could drop. That's what I believe, okay? And you believe what you believe. Now, you're going to hear a lot, and you are hearing a lot about soft recession now, soft recession, soft landing. Yes, we're going to have a recession. Even Jerome Powell is talking about recession, and you keep hearing soft recession, soft recession. Like I said on yesterday, that's like kind of pregnant, Now, here I am in the camp that we will have a recession, but it will not. This is my thought. This is not facts. But we will not. It will not be as deep, as severe, or as long as 2008. There's been a lot of fixes in the banking and the overall, a lot of safeguards, and I just don't think it'll be as severe. My question to you is, if we don't have a elongated recession, or we still could have a recession, but the market could have, look at these are the NASDAQ 100 laggards of the day. Lucid is tanking today. As you guys could see that. Look at that. Let's listen for a minute.
In just about 4 minutes.
CNBC celebrates
opening bell in 4 minutes. So my question to you this morning is, what are you doing if stocks, let's just say if stocks have already bottomed out? What are you doing? Okay? What are you doing? Are you all cash? Are you all in right now? Or are you DCAing? Because I want to be crystal clear. Even if you think the market is going down, people always ask me, you keep saying that you're DCAing with your $5 a day, which is more than $5 a day for me. Why would you do that if you think the market is going down? Because no one knows how much, no one knows exactly when, and you have to have a plan, right? And if you don't have a plan, you plan on failing. This is investing. Are you invested in good, solid companies? Are you investing short-term or long-term? I'm investing long-term, so I don't mind a dollar cost averaging like I have been consistently for years now into good companies that I believe in 5 years from now that will be higher than they are now, regardless of how high or how low they are now. I believe in 5, 7, 10 years that because I'm dollar cost averaging, that I will win. Now, the biggest chunk of my money is still in cash, and I'm okay with that. But I'm asking you, are you okay with not loading up at the bottom? Because you may think it's the bottom, and that bottom may bottom out, or it could take off again. And so that's why I have my personal strategy of, in a bear market, to continue to DCA in small amounts, but consistently in the same stocks that are not the hype stocks. I will get back into the more riskier plays when the Fed starts to pivot. That's when I'm gonna load up on the the Palantirs and those type of, low cap, high growth stock. I'll get back into those plays. But when the Fed starts to reverse, ARK made a run yesterday because there's sentiments that, hey, you know what? The worst could be over. So if you look at ARKK, it made a run on yesterday. So I just wanted to talk to you guys, and everybody has their own plan. This is not one size fit all, but I've been consistent about saying, hey, regardless of what's happening, I believe you still should dollar cost average. That's what I'm doing. Remember, anything I say is not a suggestion for you to buy, hold, or sell. So we got 57 seconds, and I want to read what you guys think and what are your strategies this morning, okay? Let's listen to what they're saying into open, and then we'll talk for a few minutes.
Always do beat and raise. I'm sick of beat and raise. People are sick of beat and raise. Stocks down on beat and raise. Okay? I'm done. UNH.
Stocks down. I do always like to point out the market value of United Healthcare, which is about half a trillion dollars. Not a bad business.
Optum is such a great business. They made $54 billion. But David, people just want more than just beat and raise. They want super deep duper beat and raise, and Jamie Dimon gave them that. That's what Jamie Dimon did. King Jamie.
Let's get to the opening bell here in the CNBC real-time exchange. At the big board. Today, it is the cast and the creators of The Marvelous Mrs. Maisel. The Amazon comedy kicking off its fifth and final season. I think 3 episodes dropped today. We're going to...
All right, let's see here. I'm not afraid of the comments. I never said that Bitcoin was going to 12,000. Listen, when Bitcoin was low, I said anything could happen. I've been saying on every single I've been saying for many months now that we are in the accumulation phase. Good people, if you've heard me say that at least 20 times, leave a comment. And what have I been saying you should be doing in the accumulation phase? Accumulate. That's what I said. All right. So as a matter of fact, last night I sent this over because, again, shout out to Stocks with Josh. He said Ethereum at 2,000. And this is what happened last night. Look at Ethereum. Went up. Look at Bitcoin, almost 31, right? And so this is the accumulation phase I have been consistently saying. Talking about the 4 phases, I had a live crypto summit. I have said, listen, this is what we should be doing. Well, this is what I'm doing. And I'm sorry, this is what you should be doing. Now, that is one suggestion I made, is what you should be doing. If you've heard me say that over 20 times, leave me a comment. And for many months. Yep. Thank you. Thank you. Thank you. People, yep, thank you. So this is what I'm going to say. Yes, thank you. Yep. Yes, I believe that too. I believe that too. And you have to understand, take a look at banks. Yep. You have to understand, even stocks with Josh, if you look at the Wyckoff system, I believe the Wyckoff, we're playing it. If you look at it, we have these runs and then there is a pullback, right? But the cycles don't have to be exactly like they were before. So what do? What I said is, and what I'm doing is, now that I am DCAing into Bitcoin, right, and Matic, and so what I'm doing is I'm dollar cost averaging. But when and if Bitcoin goes down even more, then I'm going to double down on my dollar cost averaging into Bitcoin. And I have consistently also said that all of my cryptocurrency investments will be done by Q3 or a couple of weeks into Q4. So I have this window that I'm putting all of my money in because we're in the accumulation phase, okay? And so I suggest you look at some of my crypto videos. And I made one talking about what I think is going to happen to crypto. Now, one of the things that helped bolster Bitcoin was the banking, all right? So it doesn't matter who you're listening to, what talking head, CNBC, Fox Business, it doesn't matter. Stocks with Josh, anybody talking about crypto or stocks. One of the things we have to consider is one news story could change everything. No one has a crystal ball. No one could have predicted of us knew exactly what bank was going to fall and like that. None of us knew exactly what was going to happen with SVB and the collapse of the banking. If you did, let me know, because I'll quit my job and follow you. And that changed Bitcoin because people were pulling their money out, and there was the only thing that you could trust at the time. Bitcoin was more stable than having your money in the banks when people were making a run for the banks. So just remember, all of the fundamental research that I do, all of the charting that Josh does, or anybody, one news story could change everything on a dime. And so you have to be ready. This is investing. This is not an exact art. It doesn't happen that way. So I want you guys to be prepared, to be ready to pivot, just like I believe the Fed is going to do. Now, personally, I believe the Fed is going up 25 basis points in May. That's what I see right now. That may change if the Fed releases minutes, if the banking system collapses after these earnings, then I will withdraw what I think about the 25 basis points, because if the banks start tanking after these earnings, then the Fed will have to take its foot off of the pedal. Follow? But as it stands now, they have propped up.
By the way, just so people know, have a book value that is not nearly as high as their stock price. Now, David, Wells Fargo, I could see that Charlie Scharf, the CEO, he bought back $4 billion at 46, and the stock at...
You said Ian Dunlap has a crystal ball. That's my boy, Ian, all right? So hopefully you're serious. But yeah, Ian has been pretty vocal, and he has been pretty on tap too. That's my boy Ian. I love Ian. Some of y'all can't take him. You know, everybody's got their way, but Ian Dunlap is my boy, the master investor. Shout out. I will see him at InvestFest. I will be there. All right. Okay, Shield Army. Yep. You're waiting for Solana and Matic to pop. There you go. There you go. Yes, please hit that like button. I'm going to end it right there because it has been 18 minutes already. I'm going to end it right there. I'll be back to you guys. We'll see what the closing bell is going to do. Hey, thank you, David Ford. All right. Hey, we here to make money. And I want to end by saying this because I was out yesterday and one of the followers saw me out. And it is funny that a lot of the people that was doing this during the bull run are gone now. A lot of influencers are gone now. One, I'll let you know that what we get paid in news like invested. Okay. One of the things that you guys don't know is us influencers are making 1/5 of what we used to make. Google is paying like pennies now. And if you've invested decently, you can keep this going. So a lot of them, to be honest with you, a lot of YouTubers simply can't afford to do this anymore. But here's what I will also say. The biggest fall off last year, a lot of influencers went away because they don't know about a bear market. They only know everybody's a genius in a bull market. They don't know how to navigate through a bear market. They don't know how to invest. They don't know anything about fundamentals. They don't know anything about anything. All they know how to do is hype one or five speculative stocks, and they blow up because we have itching ears and we want to hear what we want to hear. So they serve us, right? So now look at JP Morgan. Wow. JP Morgan is popping. Chase. Now we've been in a bull market for almost 2 years and a bear market, and they're gone, nowhere to be found because they don't know how to communicate to you guys. And so now is the time to listen to someone that has at least been through a bear market. I will tell you that my first investment was in 92. And I can hear some of y'all going, dag, how old is Larry? So I was 5 when I made that investment. But I've been through many bear markets and I've learned a lot of things, and I'm gonna continue sharing it with you guys, okay? It's difficult. It's not the same. You cannot trade the same in a bear market than you do a bull market, right? Yep. Hey, love you guys. Yep. Yep, the fake ones are faded out. But Mommy Trader's still here. Matter of fact, Mommy Trader is growing. Mommy Trader, I saw this on yesterday. Hey, you guys remember, let me pull that up. You guys remember on this show when I asked you guys to help us get Mommy Trader to 10,000, right? Remember that? And we did it live. That's what I love this family. I love you guys. Remember when we did that and we were trying to get Mommy Trader to 10,000? Well, look at what happened just because of you guys. You guys see that number? Mommy Trader just hit 12,000 subscribers. Good job, Mommy Trader. You rock. You awesome. All right. Hey, I'm going to leave it right there. I don't want to keep rambling on. Yeah, you remember that? It's cool. We need more females in this space. You guys may not know, but in this entire investing in financial space, it is dominated about 80% male and 20% females. That is a gross misbalance. We need to get more females, and especially our young girls, into investing in finance. So it's simple. Every dude that is listening to me, or a lady, especially you men, just walk up to somebody, give them the phone, and start selecting some financial pages that you listen to. Mine being number one, of course. And then turn them on to Mommy Trader. Turn them on with Josh. Turn them on to Stock Up with Larry Jones. Turn them on to Keenan Grace. And you may not think that they are absorbing this information, but the truth be told, for those of you that have a wife, a girlfriend, a boo, or a daughter, or a niece, or a neighbor, or whatever, it's the truth. I know you guys will be like, no. The females generally do better in trading than guys do. Every time I'm dealing with a couple, most of the time, not every time, most of the times, female traders do better. So if you want to be a better trader, get your wife, your girlfriend, your boo, or whoever, get them involved. Your sisters, your nieces, get them involved. And believe it or not, you will become a better trader because they think differently than we do. Okay? When you're trying to be overly risky, they'll go, no, you need to pull back a little bit. When you say, hey, I'm going to sell this stock at this price, and it takes off, and then you go, oh, to the moon, she's going to say, no, you said you was going to sell it at this price. Let's sell it at this price, and let's look for another opportunity. All right? I'm going to leave it right there, good people. I love you guys. I'll see you later on today. Live, love, laugh, learn, and earn. Have a blessed day.